Hello everyone and welcome back to yet another video on income tax. And today we are discussing the impact under Income Tax Act 1961 while you are purchasing an immovable property. Immovable property being a land or a building. And there are certain changes under this particular section on account of annual budget 2020. So let's get into details. Last week we have discussed the impact of seller while selling an immovable property, that being a land or building, which is mentioned under 43 CA of Income Tax Act. And today we will discuss the impact of buyer under 56 subsection 2 clause 10. So before starting this video, let's understand the agenda of this particular session, that is understanding section 56 subsection 2 clause 10. That is the first objective. Thereafter we will discuss the amendments on account of February 2020 annual budget. And finally, we will understand or we will discuss the new insertions announced as a part of third set of stimulus package which is given or announced by the central government as a part of this COVID relief. So let's starting with the understanding section 56 subsection 2 clause 10 subclause B. So it says any person purchases or receives an immovable property being a land or a building or both land and building, it is okay. So when you are purchasing an immovable property without any consideration, suppose you are getting an immovable property for free, you are not paying anything, then what they are saying, provided the stamp duty value should be more than 50,000 and the property for the building which you have received for free, its stamp duty value, if it is more than 50,000 rupees, then what will happen? The stamp duty value will be taxed under IFOS under section 56 subsection 2 clause 10 subclause B. Simply I will give you an example. Suppose JK, I've got a particular house from my friend, from Mr. K. Okay, K being my friend, he has gifted me a property and the value of the property was 2 lakhs. Value means the stamp duty value of the property was 2 lakhs. It was absolutely free. I haven't paid anything. If it is so, then JK being the buyer or the recipient have to pay income tax under income from other source, that is IFOS, for this 2 lakhs stamp duty value. So for this 2 lakh, I'm supposed to pay income tax. It is not stamp duty charges. It is income tax I'm supposed to pay for this 2 lakh. That's what 56 subsection 2 clause 10 subclause B states about. And there is some other provision as well, that it also says any person purchases or receives an immovable property, that being a land or a building, for inadequate consideration. Now let's understand what is this inadequate consideration. That means the consideration is not adequate. Okay, then the act says the difference between the stamp duty value and the consideration, if it is more than rupees 50,000 and the stamp duty value is more than 110% of the consideration, then the difference between the stamp duty value and consideration will be taxed under IFOS. So let's understand this particular thing by way of again an example. Okay, so I will take, say I have a building. Okay, there is a building and the stamp duty value of this building, say it is 120 lakhs. Stamp duty value of this particular building, it is 120 lakhs. Okay, so I purchased this particular building from my friend. JK purchased this building from my friend, say for 100 lakhs. So I've purchased this building for 100 lakhs, right? So we can say there is an inadequate consideration because the stamp duty value of that particular building is 120 lakhs and I've given only 100 lakhs as a consideration, right? So what the act says, if the difference between these two, that means the stamp duty value and the building, is more than rupees 50,000, if it is more than 50,000, yes, it is more than 50,000 because the difference is 20 lakh, right? So the difference is more than 50,000 and there is one more condition, the stamp duty value is more than 110% of the consideration. Here the consideration is only what, 100 lakhs and the stamp duty value is around 120%. So we can say stamp duty value is more than 110% of the consideration. If it is so, then the act says the difference between the stamp duty value and the consideration will be taxed or taxable under IFOS, and hence JK is supposed to pay this 20 lakh rupees as income, and it should be taxed under income from other source under section 56 subsection 2 clause 10 subclause B. So there are two situations, one absolutely free and the second one for inadequate consideration, provided there are two conditions. The difference between the stamp duty value and the consideration should be more than rupees 50,000, and the stamp duty value should be more than 110% of the consideration as well. Earlier, before February 2020 annual budget, it was 105%, and now they have increased the limit to 110%, or we can say the differential earlier was 5% and now the differential is 10%. Okay, so that's what the first point is. And there is another point, that the determination of stamp duty value in certain circumstance. Now let's understand this. I have explained this scenario while discussing 43 CA, hope you remember. Okay, again I'll explain, where the date of agreement fixing the value of consideration for transfer of asset and the date of registration of such asset are not the same. Suppose there is an agreement date and there is a subsequent registration date, and there are two stamp duty value on both this agreement date and the registration date. Then what happened? Then which one you have to consider for computing 56 subsection 2 clause 10 provision? That's what they are saying. Then the stamp duty value as on date of agreement have to be considered if the amount of consideration or a part thereof has been received by way of an account pay check or account pay bank draft or electronic clearing system, or through such other prescribed electronic mode on or before the date of agreement. Again, we will understand this by way of an example. Say JK is planning to purchase a particular property. Okay, I'm planning to purchase a particular property. On 1st June, I have entered into an agreement. Okay, I've entered into an agreement, and at the date of agreement, the stamp duty value was, say, 120 lakhs. Okay, and the actual consideration I'm planning to pay is, say, only 100 lakhs. Okay, this property got registered on 15th December of that particular year. So this 15th December was the date of registration. Okay, and on date of registration, say the stamp duty value is, we will take it as 140 lakhs, and the stamp duty value is 140 lakhs. So which stamp duty value you have to consider? That's what the question. So the Act says the stamp duty value as on date of agreement can be considered only if JK has paid a certain sum of money either as an advance or the entire sum of money on or before this date of agreement, and the method of paying this advance either should be by way of account pay check or account pay bank draft or electronic clearance system, or through prescribed electronic modes. We can say Google Pay, this payment bank methods or something. Okay, so if I've paid some amount as an advance on or before the date of this agreement, then I can consider the stamp duty value as on date of agreement. In all other cases, I have to consider the stamp duty value as on date of registration itself. Okay, so this is from the perspective of buyer. Okay, and again, let's continue. Takeaways. Now let's understand the takeaways from the third set of stimulus package introduced by the central government as a part of this COVID relief. So it says that the central government decided to increase the differential limit from 10% to 20% till June 30, 2021 for purchase of residential units of value up to 2 crore. It simply means what? As a part of this COVID relief, central government has made. Earlier, I've told you, if the stamp duty value is more than 110%, right? 110% of your consideration, then only 56 subsection 2 clause 10 will come into the picture. Then only the buyer have to pay tax under IFOS, okay, as per the provisions of section 56. And what, as a part of this COVID relief, the government has extended this 10% to 20%. That simply means if the buyer is purchasing a residential unit on or before 30th June 2021, okay, and the value of the residential unit which he purchases, if either less than or equal to 2 crore, the value of the residential unit should be less than or equal to 2 crore. If he satisfies this condition, then the stamp duty value have to be more than 120% of the consideration for 56 subsection 2 clause 10 to come into the picture. That means for attracting this IFOS taxation, that differential has been raised from 10% to 20%. This is the takeaway from third set of stimulus package introduced by the central government. Now, Let's move forward and understand certain other exceptions which are mentioned under 56 subsection 2 clause 10. And these exceptions are applicable for this free money received as well as the movable property received as well. Because today in this session we are only discussing about the immovable property impact. Okay, so the exceptions to 56 subsection 2 clause 10. In these circumstances, section 56 subsection 2 clause 10 will not come into the picture. So let's understand point 1, immovable property received from a relative. Suppose I've got an immovable property from my relative, then even if it is for free, I don't have to pay tax under IFOS, under 56 subsection 2 clause 10. Say a simple example, I can say I've received a property without any payment from my father. Then father being my relative, I don't have to pay what? Income tax under IFOS, under this 56 subsection 2 clause 10, even if the property's stamp duty value is more than 50,000. This is what the act says. Now let's understand who all are relatives. So this particular flowchart looks very complicated, right? But it is simple. Say individual. Say for JK being an individual, spouse, my spouse is my relative. Spouse means my wife. Okay, and then brother or sister of spouse is also my relative. Okay, so the brother or sister of spouse is also my relative, and say brother's spouse. Okay, that means my wife's brother's wife is also my relative. And again, my wife's sister's husband is also my relative. That's why spouse of this brother and sister comes under this flowchart. Hope you got my point. Individual, my spouse brother and his wife. Again, my spouse sister and her husband is also my relative. And again, spouse parents, that means parents and grandparents are obviously my relative as per 56 subsection 2 clause 10. And again, coming back from the perspective of individual, my brother and sister and their spouses. My brother is my relative, my sister is my relative, my brother's wife is my relative, my sister's husband is also my relative. And again, my parents definitely are my relatives. And my parents' brother and sisters are also my relative. My parents' brothers and sisters are my relative. And again, my parents' brother's wife and my parents' sister's husband is also my relative. That's why a spouse coming under this brother or sister point. And again, the individual's grandfather and grandmother, both the grandfather and grandmother are my relatives. And again, my son or daughter and their spouses are my relatives. My son and his wife, my daughter and her husband, both are relatives. And again, my grandson and granddaughters and their spouse are also relatives. So this is a complete definition. This is an exhaustive definition. This is a complete definition for relative for the purpose of this IFOS taxation. So if I am receiving a particular building or a land without any consideration or for inadequate consideration from these persons which I have mentioned in the flow chart, then I need not pay any taxes under 56 subsection 2 clause 10. It is purely exempted. Got my point? So moving forward, second exception, that is immovable property received on occasion of marriage of individual. Suppose I've got a immovable property on account of my marriage, at the time of my marriage, from my friend. Friend is not my relative, but if I've received this immovable property, that means a land or a building at the time of my marriage, then I don't need to pay what? Taxes under IFOS. This is another exception to 56 subsection 2 clause 10. And moving on, if I've received a property under a will or by way of inheritance, if under will of a particular person or as a part of inheritance, I've got a particular movable property, then also 56 subsection 2 clause 10 will not come into the picture. Again, point number 4, if it is in contemplation of death of a donor, suppose a person at the time of death, say my neighbor, he does not have any relatives, okay, and my neighbor at the time of his death has transferred his every property to me. Okay, happy moment, right? If it is so, then also 56 subsection 2 clause 10 is not applicable, because if the property is received in contemplation of death of a donor, then also this particular IFOS provision will not come into the picture. And moving forward with the fifth exception, that means immovable property received from local authority. Suppose from panchayat, municipality or corporation, I am getting an immovable property for free or for inadequate consideration. Again, this 56 subsection 2 clause 10 will not come into the picture. And again, immovable property received from any specified institution which is mentioned under 1023C. Under section 1023C, there are certain specified institutions such as educational institutions, hospitals, government funded universities, etc. If I'm receiving some immovable property from these specified institutions which is mentioned under 1023C, then also 56 subsection 2 clause 10 will not come into the picture. And moving forward, any trust or institution which is registered under 12AB, earlier it was 12AA of Income Tax Act 1961. And now the new registration procedures has been introduced, and I've done a separate video for that as well. Don't forget to check that, okay? And if I'm receiving a particular property, immovable property, from a trust, a charitable or a religious trust, then also this 56 subsection 2 clause 10 will not come into the picture. And moving forward, moving on to the eighth exception, it says immovable property received by any trust or institution registered under 12AB. That means suppose I'm giving an immovable property to a trust or institution. So the trust or institution who is the recipient of that particular property also is not supposed to pay what? Any taxes under IFOS. In the last point, that means in point number 7, we have discussed when I am receiving a property from that particular religious or charitable trust, I am not supposed to pay under 56 subsection 2 clause 10. And in this point, in this 8th point, what I've said, when I am transferring my immovable property to this particular religious or charitable trust, that trust is the recipient. So, okay, that trust is also not required to pay what? Tax under IFOS. It is also accepted. Then again, point number 9, immovable property received by any specified institution under 1023C. If the recipient is a party which is mentioned under 1023C of Income Tax Act, that means that specified universities, educational institutions, hospitals, etc., then also it is provided as an exception. And moving on to the point number 10, immovable property received by way of transaction not regarded as transfer under section 47 of Income Tax Act. Under section 47 of Income Tax Act 1961, there are certain transactions which are not regarded as a transfer. Okay, say for example, a 100% subsidiary company has given a particular immovable property to its holding company. Okay, it is a transaction not regarded as a transfer as under section 47 of Income Tax Act. And under that situations, then also it works as an exception to 56 subsection 2 clause 10. That means when the subsidiary company, 100% subsidiary company is transferring a particular immovable property to holding company. The holding company being the recipient is not supposed to pay any taxes under IFOS under section 56 subsection 2 clause 10. Why? Because it is an exception. Okay, and point number 11, it says an immovable property received from an individual by a trust created or established solely for the benefit of a relative of the individual. Say there are two kinds of trust, a private trust and a public trust. Okay, under private trust, an individual can create a private trust for the benefit of his relatives. Okay, so if the individual created a private trust and transferred a particular immovable property in the name of that trust, which is actually created for the benefit of his relatives, if it is so, then under clubbing provision, every income will be taxed in the hands of individual itself. So as a consequence, under section 56 subsection 2 clause 10 says, when an individual transfers an immovable property in the name of a private trust, which is created for the benefit of his relatives, then the recipient being that particular private trust is not supposed to pay any taxes under 56 subsection 2 clause 10. Why? Because it is not regarded as a transfer indirectly. Okay, that's why every income earned by that particular private trust from that particular immovable property is clubbed in the hands of what? The individual transferor itself. And that's why it is provided as an exception to 56 subsection 2 clause 10. And moving forward, the last point, the 12th point, it says, any immovable property received from such class of persons and subject to conditions as may be prescribed. If the CBDT prescribes any conditions and gives out certain class of persons name, then those class of persons are also exempted from 56 subsection 2 clause 10. That's what the Act says, and this is with effect from 1st April 2020. So that's all for now. Thank you for watching my video. See you on next Sunday with another interesting topic on income tax. Take care and bye-bye.